what do you think about inflation? Economists are looking for a year-over-year move of 8.4%. That would be the highest in more than 40 years. It's expected to be up 1.25%. And yesterday, the White House press secretary, as you just heard, said that it will be extraordinarily elevated. What should we expect, and what's priced into this market?
Well, it's going to be a doozy. You know, I was around in the 70s and the 80s on Wall Street because I started when I was 12. And I have to say that this reminds me a lot of that period. We had about 7 or 8 years of pretty difficult inflation. I think we're going to run 4 to 5% for the next several years. I also think that a lot of the inflation impact has not yet gotten through the system. Obviously, we've already seen energy. And despite what the White House is saying, energy was already high before the Ukrainian conflict basically went on fire. It was I think Brent crude was trading in the low 90s in December, and I think attributing the energy spike to the situation in the Ukraine is wrong. I think it's useful politically, but I don't think it's quite accurate. You know, we've had a demonization of fossil fuels for quite a while here. And so, that's going through the system.
We've got the timeline on inflation, Fred. Look at this timeline that we've got, because the timeline clearly indicates what was happening with inflation alongside what was happening with the spending plans out of Washington. And when the president signed in that COVID relief package back in March, that was the first move up in inflation to 2.5%. Then by July of 2021, inflation was at 5.5%, as the Democrats were proposing another $5 trillion in spending. By November, inflation was at 6.8%, and then, of course, take it to 7.9% with the invasion. So you're right, inflation was moving higher as a result of this policy out of Washington.
And I think it's going to get worse, and let me explain why. First, let's use copper as an example. Copper has increased 60, 70%. The amount of copper used in electric vehicles is 4 to 10 times what it is in a combustion engine car. And then we have, if we have infrastructure spending, which I think we will have, and the re-electrification of the country, so we can basically, use electricity everywhere, which I don't think is that efficient. But nonetheless, if we do that, that's going to consume a lot of copper. We're seeing the same thing in lithium. We're seeing the same thing. Obviously, we see it in oil. We see it in aluminum. We see it across the board. Some of those impacts have not yet worked through the system. So I think we're going to have tailwinds for inflation for quite a while here, which leads us to basically to say, okay, where can we hide, or where can we find opportunity? And I think we see it in the reindustrialization of the United States. There's no question that globalism is being pulled back. I don't think it's going away completely. But with respect to those areas of our economy which are considered to be strategically critical, matters of national defense, semiconductors being an example, cybersecurity being an example, aerospace technology being an example. All of those, I think, are going to get pulled back. And I think that's going to create a reindustrialization in this country, which is going to have some impacts on industrial technology, robotics, 3D printing. We see all of those. We see a lot of this this move to be very positive to our focuses, which are really on emerging technologies, growth technologies. And I'm not talking science projects, okay? I'm not talking about, investing in electric vehicle companies that don't have revenues. I'm talking about real companies. They're out there. And I think this is a market with so much volatility that you have to be a stock selector.
Can you avoid the elevated price of oil? I mean, this morning oil is rebounding after dropping 4% yesterday. But this is more about the demand side of the story. There were worries raging yesterday about China's COVID lockdown, sparking supply chain concerns. 26 million people locked down in Shanghai. Crude seeing the lowest price since February 25th. It is bouncing on that this morning. We're looking at a gain of about 4%. But what about oil? How does that fit into your plans?
Well, I think until we have a shift in our views about fossil fuels, which I think we're starting to see a little bit of that out of Washington already, as the fable that renewables can carry the day here becomes seen for what it is, a lie. I think fossil fuels will start to get reinvestment, and I think we will see some price stabilization. I don't think it's going to happen quickly, and frankly, in a strong economy, we're going to be consuming fossil fuels at a very substantial rate. I want to make one other comment. I've spoken in the show before about how you have to invest in real assets. One of the assets that we think is important to consider, frankly, our goal is gold. And not only the gold as an asset, but also the gold streamers and the gold miners. You know, there's 20 times more paper gold out there than there is real physical reserves of gold in the world. When I say paper gold, what do I mean? I mean these are options, these are futures contracts. So there's a huge multiplier effect out there where existing physical gold has been hypothecated. In the event that enough investors were to basically say, I want physical gold, I want the gold delivered, we would have a run on gold that would be incredible. And I also think we've had such fiat currency debasement globally that I think people are looking at gold as a safe haven. We certainly see it as a safe haven. We think that the price is depressed, frankly, because of the impact of paper gold. We think that will reverse itself. We don't see gold, and particularly gold miners and gold streamers, a much more leverage way to play gold. We don't see them as just defensive assets. We see them as offensive assets, similar to, frankly, technology stocks.
Yeah, that is a great point. I'm glad you made it. I know you wanted to make that point the last time we spoke. Gold right now at 1958. What would be your prediction of gold a year from today? Real quick, Fred, we got to jump.
2,500. 2,500 is my prediction. 2,500.
Okay. Okay. Fred, it's great to see you. We're going to be watching all of that, and we'll talk with you along the way. Thank you, sir.